Hello traders and welcome to another video review. Today is Friday, the 15th of January 2021. Let's take a look at the Forex calendar to see what is going on the markets, and then of course we'll do some technical analysis. So let's just swipe down towards the Friday. As you know, we got some data from the China. They had been published already. Unfortunately, there is no actual reading, but we will take a look at the Australian dollar for sure to see what is going on here. There are other data, as you can see, that had been released as well. From the UK, we got the data regarding the GDP, better than expected. As you can see, we are still under the zero level, but it's minus 2.6%, which is better than minus 4.6%. Good, kind of a good data for that situation from the UK. Industrial production a little bit less impressive and more concerning, minus 0.1%. Forecast was 0.5%, so it's as you can see, it's still red. Manufacturing production 0.7%, just under the target of 1% again. And the visible trade balance is widening, so this is not quite that positive. Construction output better than expected, 1.9% versus 0.8%, and the index of services 3.7% versus 2.5% forecast. So bunch of a mixed data from the United Kingdom. So I think that the euro to the pound will be the best currency pair to take a look after this data were published. A bunch of other data not that quite interesting for us. And during the New York session, we have important data from the US, of course. Retail sales 2:30 as usual. We will see what is the figure here in a couple of hours. PPI index, of course, and PPI core index. And then, as you can see, we got plenty of other data. New York Fed Empire State manufacturing index, capacity utilization, industrial production data, manufacturing production data, Michigan Consumer Sentiment Index, and University of Michigan inflation expectations. For those of you who trade crude oil, at 7 o'clock p.m. there's a bucket huge US ring count. So plenty of data from the US. Including the key data retail sales. Of course, if the retail sales are up, then it would mean that the sentiment is in the consumers is getting better. It just is accelerating, right? It's ascending or like it's growing, like from the current situation, pandemic situation, is growing a little bit. There's a hope for the better future because people are buying, the consumers are spending the money, so retail sales are growing. Sometimes they grow very, very dynamically, sometimes less dynamically, but I think it should be better than expected. 0%, any positive number is good for dollar, and the US dollar might continue the bounce. So we should take a look at the US dollar as well, and we should take a look at the US dollar to the Swiss franc. Okay, so let's take a look on the first one, Australian dollar, after the Chinese data. As you can see, all of this week we've been trading in this narrow zone between 7,679, this is the support, and 7,840. Let me just change this color for the green, so we can, yeah, there you go. Not much has changed since then. We don't have any new high. It looks like we completed the 5-wave structure of impulsive advance. Now we have a first wave down, and this is the wave B. So we are expecting wave C to the downside soon, right? And if we break below 7,679, the next target is 7,643. So that will be simple ABC. This correction might be a little bit more complex, and it might get like into the complex correction, ABCX, ABC, or something different. But we will see what how it's going to be when the wave 3 is completed. So this is not the end of the decline on the Australian dollar. If, however, the US dollar index will accelerate, and the dollar will be bought across the board, then of course we should have a sharp downside move, right? So we already trading just above the level of 60, which is still positive and strong sentiment, but as you can see, sentiment and momentum, but as you can see, if we break below 60, then it would mean we will break below 7,679 pips as well. So the Australian dollar ranging, but we are looking for another wave down. Euro to the British pound, very interesting. Price action, as I said earlier this week, after the level 8,951 pips is violated, the next target is 8,865 pips. Why? Because supply came here, they pushed the price lower, so all of this, so this breakout is virtually invalidated right now. Let me just extend the line. Maybe this line will act in the future as a kind of a support again. Anyway, the key technical support 8,865 pips is now being challenged because this low is at 8,869 pips, so it's only 4 pips away. This low on this candle, 11th of November 2020, has been made at 8,860, so there is only 9 pips for the new low, right? So if the market will make a 10 pip move to the downside, then of course we will have a new low, and this would mean the downtrend on the euro is being continued. So the people are selling euro and buying British pound. Right now, the next target for the euro to the British pound is seen at 8,850 for this week. US dollar and the Swiss franc ahead of the data from the US. So right now we are trading according to the scenario. The market is range bounded between 8,918 pips as a technical resistance and 8,825 pips as a technical support. Our scenario is that this level 8,918 pips will be violated sooner or later. As you can see, the market tried a couple of times to break above it. In the meantime, it will be consolidating, but if there is a breakout, the next target is 8,998 pips, which is the key technical resistance, and of course it will be somewhere close to this trend line resistance as well. As you can see, this trend line is marked in gold. So we are waiting for the data. Basically, we are waiting for the data to trigger the move to the upside. Of course, if the level of 8,835 is violated, then this black scenario is invalidated. USDX, again US dollar index. What is going on here? Well, not much. We are still doing the wave A of the corrective advance, but the key of 91.01 has not been violated. So we're just ranging at the end of the week. We're just ranging in the between the levels of 90.55 and 89.90. We are waiting again for the trigger to start another wave to the upside. As you can see, the RSI is right now 49.50, somewhere there, so it's kind of a negative, but it's looking very nice every hour, because it's very close to the neutral level of 50. So that was the US dollar index. Still, the outlook is positive for the US dollar if the level of 91.1 is clearly violated. And the last thing we will take a look of is gold. So what is going on the gold? We are currently trading out of the channel, so we have a channel breakout. Very nice setup for the shorts, and the low was made at 1,817. Since then, some days of range trading, but all of them are below the technical resistance at 1865, so this is our range. Currently the sentiment, the momentum is negative, so the sentiment is like, oh, okay, it might go down, the yellow precious metal, and of course the down move will accelerate if the $1,817 is violated, because this is the defense candle, so we call it like a kind of a, it's a pin bar, kind of a hammerish, kind of a this kind of a trend reversal candle, but if it's challenged again, especially 1817, especially this level, then of course we can go lower towards 1762. So that's over $50 move on the gold ahead of us, if everything will go fine. So that is my technical analysis for the Friday. I hope you guys like it, and that's everything for me for today. So I hope I will see you on Monday. So have a nice Friday, have a nice weekend, and see you later, guys. Take care. Bye bye.